Now we would start with the transactions and we will learn if we can prepare balance sheets using them. Okay. So the typical process through which accounting is done. First step in the cycle is you start with transactions. Then those transactions we have seen are recorded into which book? Transactions are recorded into journal book. After being recorded in the journal book, we would put them in ledger books. After ledger books, by the end of the year, we will prepare trial balance. And after having prepared trial balance, then in the last step, we will prepare financial statements. Primarily three of them: income statement, balance sheet and cash flow statement. Now we do not want to become accountants with this program. What we want to learn is to read balance sheets and try to make analytical sense of them. So the process we would be using today, we will start with transactions, we will skip journal, we will skip ledger, we will skip trial balance. We will see that what effect every transaction will have on the income statement and balance sheet and cash flow statement of the organizations. Okay. So the process that we would be following is, we will first have a small setup or small set of transactions. I will prepare financial statements, then I will give you one to prepare, and in this fashion we'll keep on moving further. So let's start with first example. Okay, I'll keep it relatively simple. Transaction number 1. Let's say a new business is started and we have invested capital of 1000 in our business. Okay. Now your first balance sheet, which is going to look like a simple box. The box is made of two parts. The left hand side of the box we are going to call this as liabilities, and right hand side of the box we are going to call this as assets. Now there is no rule for this, it is just a convention. In a lot of countries, assets are written on the left, liabilities are written on the right, so it does not matter, you can write anywhere, anything anywhere. Now capital 1000, what have we learned? Capital is what? Liability. Capital is a liability. So I am writing capital here. Okay, I want you to observe carefully, I'll give you time to write. Capital 1000. And this is where we would be learning a system of accounting called double entry system. And what double entry tells us is that every transaction is going to have two parallel effects. So think from a business perspective, a capital of 1000, that means they incurred a liability, but did business receive anything? Cash. Business received what? Cash. And cash is what? Cash is an asset. So we will write down cash here, which would be 1000. Make sense? Then second transaction, let us say there is a bank loan that we have taken of 10,000. Bank loan should be what? Liability. So we will write bank loan here 10,000. But when you take a bank loan, what should be the second effect? Cash should increase. So now your cash will become how much? 11,000. So I'm just going to make that adjustment here itself. Okay, so two transactions we've done so far. First was capital, which was liability cash. Second was bank loan, which was again liability and cash. Third transaction, let us say out of that cash you decided to purchase a building worth 5,000. Now tell me, building is what? Asset. So I'm writing building here on the asset side, 5,000. But when you purchase an asset, what goes out from you? Cash will go out. So your cash, which was originally 11,000, now it will be how much? 6,000. Now if you'll observe carefully, you'd realize that after every transaction your balance sheet is tallying. And balance sheet tallying means total of liability and total of assets are same. And why are they same? Because you're making it this way, isn't it? Now in the first case we said 1000 here, we added 1000 here on the liability side. We added 10,000 here, we added 10,000 here. Now we added 5,000 here, we removed 5,000 here. we are making balance sheet in such a way that your balance sheet total is going to tally. Fourth transaction, you purchased furniture, let us say of 1000. Furniture should be where? Assets. So furniture 1000. What should be second effect? Cash will reduce. So now cash will become how much? 5000. Is your balance sheet still tallying? Yes. Now the total is 11,000 on both the sides. All these entries are of capital nature, meaning of which is we've not done any business activity so far. Now let us do the first business activity. Let us say we made some amount of sales. So it must be a consulting business because we don't have any goods so far. So we made some consulting sales, let us say of 5,000. Now the moment you do activity of revenue nature, what you will also have to prepare is income statement, which is again made of two simple boxes. The box on the left we are going to call this as expense, and box on the right we are going to call this as income. Now we've made sales of 5,000. Is that sales expense or income? Are you sure? Sales income? How many of you feel income? Okay, fine, then I agree. So sales is an income of 5,000. But when you make sales, your cash goes out, right? Comes in. So your cash will increase. So now with this transaction, you are having one effect on the income statement, second effect on the balance sheet. Your cash, which was originally 5,000, now it will become how much? 10,000. Now let's see if your balance sheet tallies. How much is the total of left hand side? 11,000. Right hand side? 16. Is it tallying? No. Now it will not tally because there is some unfinished business in your income statement. Are we together on this? So the moment income statement comes into picture, your balance sheet will not tally after every transaction. Your balance sheet will tally at the end of the financial year or accounting year. We'll see that how that happens. Let's say transaction number 6, you made some salary expenses of 3,000. Where should I write that? So here we would write salary 3,000. What should be second effect? Cash will reduce or go out. So cash is now how much? 7,000. Okay. So let's stop the business here. Is your balance sheet tallying right now? No, it is not tallying. But first step is, now this is called finalization process. So the first thing that we will do now is, we will say that my total income is 5,000. My total expenses are 3,000. Difference between your total income and expenses should be how much? 2,000, and we'll call that as profit. So you have made a profit, and you would be surprised to know that profit we write on the expense side. The reason we write that on the expense side, because it is a plug figure or it is a balancing figure. Okay, so we write it in such a way that total of both the sides is same. And profit for a business is what? Profit for a business is its liability. So we will take this profit, we will transfer this on the balance sheet side. When profit is transferred on the balance sheet, that number is called as reserve. Ideally it should be written below capital, but I am writing it here. Okay, so reserves, and reserves here would be 2,000. And now you take a total on both the sides. So here total is 13,000. Here total is 6 and 7, 13,000. And then your balance sheet will tally. Are we okay here? Now just wait for a minute. These liabilities at times are called sources of funds, and assets are called application of fund. Okay. Now forget the nitty-gritties and think of it from a broader perspective. That to do a business, you need to have assets, you need to put in money into your manufacturing process. So you need funds. This business has got those funds from which places? Owner invested 1000 of their own. Bank invested how much? 10,000. And the profit that they had made, they reinvested that profit in the business, which is called reserves, 2000. So your total sources were 13,000. And what did you do with those sources? Out of that 13,000, 5,000 you invested into building, 1,000 you invested into furniture, and remaining 7,000 you've kept in the cash. And if next time someone says that why balance sheet tallies, it has to tally because your sources and application of funds is always going to match. Are we fine here? So now you can write down quickly. So I'm writing transactions and then you try to prepare balance sheet and income statement here. Should I increase the level one notch? Can it be slightly more difficult? First transaction. Capital 100. Bank loan 500. Let's purchase a building of 200. Let us purchase furniture of 100. Let us make sales of 1000. The only small trick here is that 80% of the sales is on cash. If 80% is on cash, then remaining 20% is on credit. Right? So 80% of the cash you've received, 20% is yet to be received. That's the only small difference. And then let us have electricity expenses of 200. Prepare a balance sheet and income statement. So this is your balance sheet. This is your income statement. In case if you've not been able to tally, please observe carefully so that you'll understand where it went wrong. Capital 100, where should it go? Liability. Second effect should be in cash. Bank loan 500, where should we put this? Liability. Second effect again in cash, which will make our cash as 600. Now when you make financial statements, you don't make the adjustment directly here, okay, the way I'm doing it, but it's easier to understand that way. So that's how I'm doing it. Building 200, where should we write this? Asset side. Second effect, cash will reduce. So now cash is how much? 400. Furniture 100, same effect. So furniture 100. Second effect, cash will become 300. Okay, so far all of these were capital nature transaction. We did not touch income statement. Is the balance sheet telling right now? Yes, the total is 600. Now the next item would be revenue nature. Sales. Should I write 800 or 1000? Should we write 1000 or 800? How many of you feel 1000? 800? Okay. So because we are following accrual system of accounting, accrual means it does not matter how much cash we have received. What matters is how much income we have earned. We will say entire 1000 is going to be your income. But have we received cash of 1000? No, we've received cash of only 800. So to the cash we will add only 800 here. Right? We are not going to add 1000 because we haven't received that. So your cash will now become how much? 1100. So here I am writing 1100. But then how about that remaining 200? That 200 is yet to be received. What do we call them? Debtors or accounts receivable. And is that an asset? Yes. So we will say accounts receivable 200. Now try to see big picture here. Had this sales been on cash, entire 1000 in cash, We would have added 1000 here, correct? But now what we did is we added 800 to cash and we added 200 to accounts receivable. The effect is still the same. On the asset side we are still adding 1000. It's just that we are dividing that into two parts. Are we okay with this? And then the next entry, electricity expense 200. Second effect, cash, and cash now should be how much? 900. Now we will calculate profit. Profit 800. Where should this be transferred? Reserves. So let me write bank loan here, and reserves would be how much? 800. And then the balance sheet total, which is 1400 and 1400. Any step you want me to repeat again? Clear? So what are my sources of funds? Owner invested 100, then owner reinvested profits of 800, bank loan 500. And what is the application of these funds? 200 into building, 100 into furniture, 200 in accounts receivable, and 900 with you in cash. Are you fine? Now there's a shortcut way to tally your balance sheet. I generally disclose the shortcut towards the end of the session, otherwise everyone uses shortcuts. Now observe the asset side carefully. What assets do we have here? Building, furniture, accounts receivable, and cash. The problem is with cash because cash is changing after every transaction. So if you want to find out how much is the cash, you'll have to solve for the entire set of transactions. But look at the left hand side. We have capital, we have bank loan. Capital can we find out easily? Bank loan easily. And what do we have here? Reserves. Could we have found out reserves directly by saying 1000 minus 200 would be the reserves, which is 800 as your profit? Which means on the left hand side total should be how much? 1400. So your liability side total 1400. On the right hand side we know we have building, we know we have furniture, we know there is going to be an accounts receivable. So balancing figure cash would be 900. Right? This is the accountant's way of forcing the balance sheet to tally. Right? Now once you build perspective like this, then within fraction of second you can tally your balance sheets, because you just have to imagine what are my sources. Capital, bank loan, reserves, these are the most popular sources on any balance sheets. Should we increase one level above or two level above? Capital 1000, bank loan 1000, interest on bank loan. So I'm trying to make it more realistic now. Bank loan would not come for free, we'll have to pay interest. Let us say 10%. Let us purchase a building of 400. Let us charge depreciation on building 25% of the value of asset. Let us make sales of 4000, 50% in cash. Let us pay salary expenses of 2000, 50% outstanding. Outstanding means yet to be paid. Now prepare income statement and balance sheet. Right, how many of you have got 4800? This is your balance sheet. This is income statement. In case if you could not tally it, please observe carefully so that you will be able to identify the mistake. Capital 1000 I'm writing on the liability side. Second effect cash 1000. Bank loan 1000. Second effect cash would be 2000. Interest on bank loan 10%. So which means we will have to pay interest of 100. Is that a liability or expense? It is an expense. We are making an assumption that interest is paid. So on the expense side, interest 100. What should be the second effect? Yes, whenever you will have an expense, if it's a cash expense, you will reduce cash. So now your cash will become how much? 1900. How many of you got this transaction right? Okay, fine. Building 400, where should I write this? Asset side. So building 400. What should be second effect? Second effect would be cash. So cash will now become how much? 1500. Depreciation on building 25%. 400 into 25% is 100. Can I say depreciation is an income? Depreciation is an expense. It's a reduction in value of asset. So depreciation 100 here. And then cash will reduce by 100? No? Cash will not reduce? Cash will reduce. Right? We have to pay depreciation to the income tax department. No? Sales tax department. It's a non-cash expense. So one sentence you want to remember is, we never write checks for depreciation. That means depreciation is a non-cash expense. Right? That 400 for building you paid sometime in the past. Now you're just reducing the value of that building. Which means for some other expenditure, you would have reduced cash of 100. But for depreciation, we will reduce the value of building 100 and we will make that building equal to 300. Are we fine on this? How many of you got this entry right? Okay. Next step. Sales 4000 but only 50% in cash. How much should I write on sales? 4000. But cash we will increase by how much? Only 2000. So 1500 will become how much? 3500. But how about remaining 2000? We will show that as accounts receivable 2000. How many of you got this one right? Great. Salary expense 2000. How much should I write on expense side? Entire 2000. So salary 2000. What should be second effect? Cash we should reduce by how much? Only 1000, because we paid only 1000 in cash. So your cash will become how much? But then how about that remaining 1000? It is still to be paid and therefore it would be a liability. So we will say outstanding salary 1000 and then we will go on to the finalization process. Now how many of you got the last entry right? Last entry, how many of you got it right? Okay, should I repeat that again? We said that salary expense entire 2000 is an expense, but cash we reduced only by 1000. Remaining 1000 we created a liability of outstanding salary. Then the finalization process where you find out profit. How much should be the profit? 1800. And this profit we will transfer to reserves, or I'm writing that here, reserves 1800. And then the balance sheet total 4800. This is also 4800. And then we will say that balance sheet has tallied.